Hi everyone, let's focus on my preferred and alternative medium time frame and low time frame scenarios, including potential trading setups, starting with my preferred medium time frame Elliott Wave scenario on Bitcoin, where I'm looking for this to be a 5-wave move to the downside in a wave A or a wave 1, followed then by a 3-wave structure in a B or 2, and then a continuation to the downside in either a wave C or a wave 3. If we then zoom into the corrective structure, I'm looking for a WXY, which is a 3, 3, and then eventually another 3-wave move, where the most common target for a wave Y is in between the 1 and the 1.236 over here, the 2 fibs, taken from the low of A to the high of W to then the low of this wave X. Now, as you can see, the 1.236 is above the invalidation level. However, the 1-to-1 over here is a very attractive target, as it also positioned in the middle of my target box between 30.2K and 30.4K. So that is quite interesting, where we also have a double top just above at 30.5K. So maybe a little bit of a liquidity grab before then a continuation to the downside. I do think it is important to mention the CVD, because if we look at the CVD, price created a higher low, but on the CVD yellow line, it actually created a lower low. And you will be able to see this if I move my cursor, and you got to look at the horizontal line of my cursor. If I move my cursor to the low over here of the yellow line, and you look to the right side, then you can see that on the right, the yellow line dipped below my horizontal cursor line. So we have a higher low on price, lower low on CVD, which is a bullish divergence between this low over here and the low that we made. The target for a bullish divergence in this scenario is taking the high over here at about 29.9K. However, it does not mean that price right now has to move to the upside. It can continue down still a little bit more, create more bullish divergences, and then continue to the upside. However, we talk more about the lower time frame scenarios in a second. If I go to my alternative scenario on the medium time frame, I'm looking at, instead of this being a 5-wave, a 3-wave move. So we then have a WX and then a Y over here. The reason this is an alternative scenario is that this 1.618, as you can see, taken from the high to the low of W to the high of X, is a rare target for a wave Y in blue. And as you can see, we spent quite a lot of time below this 1.618 as well. However, I can't completely invalidate it because it is still a rare target, and price did stick around the 1.618, even though it dipped below quite a lot of hours. So in this scenario, because this is now a 3-wave structure to the downside, we basically have two options. We have a WXY, which is a 3, 3, and then another 3-wave move to the downside, or we have a flat, which is then an A, B, and then eventually a wave C to the downside, where wave B is a 3-wave move, but wave C is a 5-wave structure to the downside. And the most common flat is an expanding flat, where the target for wave B in an expanding flat can be seen over here, which is in between the 1.236 and the 1.38, which is basically between 32K and about 32.7K. And also it has great confluence with the 2022 range highs for maybe a liquidity grab and a move to the downside. And also, not to forget, if this is a WXY, yes, I already spoke about the most common target for a wave Y, but the rare target, there we go again, the 1.618, is right inside the most common target for a wave B, and also right on the same high basically, or the same level of the 2022 range high. So that is very interesting. So if price would continue to the upside and take this high, then this would be the next area I would be looking for maybe a liquidity grab and then a reversal to the downside. If we go to the lower time frame scenario over here, which is my preferred scenario, I'm looking for this to be a 3-wave structure in a wave W, with then inside this wave B or wave X a triangle, followed by a corrective structure to the downside in a wave X, and then eventually continuation in a wave Y, where this wave Y has to be a 3-wave structure. So basically what I'm looking for is, if we look at the fibs taken from the low of W to the high of W, usually a wave X is hitting the 382 as a minimum target, which basically sits at the same level as the daily naked point of control at 28.9K, which as it stands now is still untouched, as well as the 382 is still untouched. So I wouldn't be surprised if price, whatever it does, eventually might move a little bit further to the downside and then eventually move to the upside for wave Y, which actually, if we look at the targets for wave Y, would be quite nice, because besides common targets for wave Y being the 1 and the 1.236, which as you can see is far above the invalidation of this scenario, because we expect downside, right? We do also have the 0.618, which also is still a common target for a wave Y. And the lower this wave X is going to go, the lower the 0.618 is going to be as well. So if price would maybe manage to go to maybe, let's say, the 0.5 over here, the 0.5 fib, or at least towards the 382, you can see that the 0.618 is getting closer and closer, or inside the blue target box that I have over here, which would be great confluence. And also we would then hit the daily naked point of control, so we would basically remove this from the chart. So that would be quite nice, right? And also the bullish divergences that we have would most likely become stronger if price is going to make more lows over here. The bullish divergences, as explained over here, would likely increase as the CVD would continue moving to the downside. So that would be quite nice for then a continuation to the upside to take the high over here as well as the high over here, hit the target box, hit the target for a wave Y being the 0.618, and then move to the downside. It is, however, important that this move, whatever it is, the move that we eventually get to the upside, is going to be a 3-wave structure. If this is going to be a 5-wave structure, then basically these scenarios are going to be doubtful, because you want to see in a wave Y a 3-wave structure. And if this is going to be an impulsive move where the volume is going to be increasing as price is moving to the upside, both of these are not a good idea. Now we do have a more risky and a safe scenario. Now the risky scenario is if price hits the target box, one enters with a short, stop loss at the invalidation of 31k, expecting a move to the downside. But that can be seen as trying to catch a knife, because you never really know what price, of course, may do. A more safer option would be to see if price is going to create a 3-wave structure to the upside, hit the target box, hit the target area maybe for a wave Y over here, then create a retracement to the downside, another retracement up, creating a lower high, but then on the CVD, it's going to show bearish divergences. So a lower high on price, but on the CVD, a higher high. That is bearish divergences. And then the entry would be basically at the retracement high over here for then a continuation to the downside. That is a much safer way to trade this potential scenario. If we then look at the alternative scenario that I have on the lower time frame, this is a more bearish scenario, because now we don't expect upside, we don't expect these highs to be taken, we expect downside continuation. Then basically what this is a 5-wave structure in a wave 1, 3 waves in a wave 2, and this move to the downside is another wave 1 followed by a WXY in 2, and now we are in a bigger 3 to the downside for much lower prices to come. The reason this is an alternative scenario is mainly twofold. First of all, the 886 that you see over here on the chart, which is taken from the high to the low over here, is a rare target for a wave 2. So if this then is a wave 1 and another 2, the 886 is a rare target, and even for a wave 2, and even if it gets hit, you want to see it be hit and then immediately price moving away from the 886. And now it has been raging for a while right below the 886, which gives us a much higher probability that price is going to move up eventually to take this high and take these highs as well. Also, the fact that price closed candles above the 886 is something you definitely do not want to see in a wave 2. So yeah, the probability is higher that eventually price is going to find a bit more upside to take these highs at least. And also, if we look at this impulsive structure to the downside, which in this scenario has to be some sort of a 5-wave structure in a wave 1, you do not really see any wave 4 in this scenario. So we can see maybe a wave 1 and a wave 2, but then where is wave 4? Is this one candle on the 5-minute a wave 4? No, it's not a wave 4, right? If this is a wave 2 over here, which has many 5-minute candles, usually a wave 4 takes more time than a wave 2. And if wave 2 would be complex and takes a lot of time, then wave 4 has to be at least some sort of a zigzag, which at least should hit the 0.382 fib time of wave 2. So yeah, this is, in my opinion, just way too short to even consider this as a wave 4 in a 1, 2, 3, 4, 5, and it is much more likely this is some sort of a 3-wave structure to the downside. However, the second leg of this 3-wave structure just happens to be immensely extended, which, well, it is Bitcoin, it is crypto, it can happen, right? So that is why this is definitely an alternative scenario for me. Now, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested, and for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.